Good day. This is Peter Kniff from Castlestone Management with comments on the U.S. markets for the week ending March 21st. U.S. stocks finished another tough week with heavy losses as fear over the coronavirus and its rising death toll continued to drive investors out of risk assets. Despite interest rates at zero and the announcement of various government stimulus packages, investors are still liquidating positions. Friday was also a quadruple option expiration date, which likely added to the week's volatility. On the week, the Dow Jones fell to its lowest level since October 2016 to close down 17.3% at 19,173.98. The S&P 500 lost 14.98% to 2,304.92. And the Nasdaq dropped 12.64% to end at 6,879.52. Note that the tech-heavy Nasdaq continues to be a relative outperformer. Despite volatility and issues surrounding liquidity, the U.S. Treasury market began to show signs of stabilizing as the Federal Reserve's asset purchase plan began to have an effect. The 10-year yield slipped 1.4 basis points last week, while the 30-year bond finished virtually unchanged. The 2-year note declined 12.2 basis points as Fed rate action had a direct impact on the short-term rates. The dollar has become the safe haven trade as investors scramble for an asset not under pressure from the coronavirus. The ICE dollar index rose 3.5% on the week, its strongest weekly rise since October 2008. Gold prices slid 2.1% on the week, but began to see selling pressure abate as option expiration created other liquidity sources for investors. Oil posted its largest weekly loss since 1991, down 29% over the last 5 trading sessions. Announced government stimulus plans were not enough to offset the fall in demand due to the coronavirus and the oversupply created by the Saudi-Russian dispute. I hope you and your families are well. Thank you for doing business with Castlestone, and we'll talk to you soon.